U.S. banks have quietly backed away from a $20 billion bailout plan for Argentina, a plan designed by Treasury Secretary Scott Bessent and strongly backed by President Trump. What was supposed to be a long-term stabilization package has now collapsed into a tiny emergency loan, barely enough for Argentina to cover a single debt payment in January. Meanwhile, Nvidia, America's most valuable chip maker, is sounding the alarm. The company warns that losing access to China's market could cost tens of billions in future revenue. And listen to how Jensen Huang himself describes China's importance.
Of course, China is going to be a very large market. It's about $50 billion this year. By the end of the decade, it's probably $150, $200 billion large, considering how fast AI is growing. It is really unfortunate that the American companies can't participate in that. It's a very significant source of revenue.
That's Nvidia's own CEO admitting the China market is too big to lose. But Nvidia's nightmare doesn't end there. China now claims it has developed a chip more powerful than anything Nvidia has ever made. And with US restrictions tightening, Huang says something you would never expect from the head of a $5 trillion company.
At the moment, I'm forecasting China's sales to be zero. It's zero for next quarter, it's zero for the quarter after that. We're assuming it's going to be zero.
Zero. Nvidia is now preparing to make no money from China at all, just as Beijing accelerates its own chip breakthroughs. We'll break down Nvidia's crisis later, but first, let's look at why America's biggest banks are refusing to support Bessent and Trump's $20 billion bailout for Argentina. So subscribe to the channel and let's begin. At first, major US banks like JPMorgan Chase, Bank of America, and Citigroup appeared ready to provide up to $20 billion in financing. This would have been paired with a separate $20 billion currency swap line negotiated by the US Treasury, creating a massive $40 billion rescue package for Argentina. But now, that plan has collapsed. Instead of a long-term credit program, banks are only considering a short-term $5 billion repo loan, just enough for Argentina to cover a single $4 billion payment due in January. This isn't a simple downsizing. It completely alters how the rescue was supposed to work. The original structure relied on two pillars: dollar liquidity from the US Treasury and large-scale lending from private banks. Together, those pieces were designed to stabilize Argentina's reserves, calm currency markets, and create political breathing room. With the banks stepping aside, most of the risk shifts onto the US government, and that immediately turns a market-based plan into what looks like a political bailout. Critics warn that this imbalance could rattle investors and trigger capital flight. One major obstacle is collateral. Banks reportedly want guarantees from Argentina or a US backstop protecting them from losses. Without those assurances, lenders are refusing to commit billions and are choosing the smaller, safer repo facility instead. Politically, the pressure is coming from the top. Scott Bessent and Donald Trump have pushed aggressively for this intervention, calling Argentina a strategic partner in Latin America. Bessent argues the goal is geopolitical: prevent countries in the region from drifting into China's orbit. In other words, use economic power instead of military force to maintain US influence. But the backlash inside the United States is intense, especially among farmers. During Trump's previous trade war, China slashed purchases of US soybeans. At the same time, Argentina cut its export taxes, making its soybeans cheaper for Chinese buyers. Now farmers fear that US taxpayer money will strengthen a competitor that already took their market share. Many are calling the bailout a direct betrayal. There's also suspicion around timing. The support package arrived just before Argentina's midterm elections, leading some critics to argue that Washington is boosting Javier Milei, a close Trump ally, for political reasons rather than economic stability. Bessent rejects those accusations. He insists the US won't lose money, pointing to the Exchange Stabilization Fund's strong track record. He frames the move as a long-game investment. Stabilize Argentina now, build a dependable partner in the region, and reinforce US influence without deploying troops or sanctions. But with banks retreating, farmers furious, and political opposition mounting, the bailout now looks less like a financial rescue and more like a high-stakes geopolitical gamble. China is no longer a distant observer in South America. In 2025, it moved aggressively into the region with real money, real credit, and real influence. and that shift directly threatens the dollar's dominance. Beijing's strategy is simple. Give countries fast access to yuan when they're short on dollars. Argentina is the best example. In April 2025, it renewed a 5 billion yuan swap line, giving its government immediate Chinese currency to pay for imports, service debts, and stabilize its reserves, all without touching the dollar. And China isn't stopping with Argentina. At the China CELAC Forum, Beijing announced nearly $10 billion in new credit for Latin America. These aren't slow, bureaucratic loans. They come paired with trade deals, payment systems, and banking links that make using the yuan easy and cheap. The more these countries use China's money, the less they depend on the dollar. China's approach is patient but extremely effective. It builds the rails first: banking ties, payment systems, yuan-based lending, and once those are in place, local governments naturally start shifting more trade and more reserves into Chinese currency. By 2025, yuan loans, deposits, and cross-border transactions across the region were already surging. For Washington, this is a serious problem. The United States gets enormous geopolitical power from the dollar being the default currency for trade and reserves. If South American countries start buying, borrowing, and saving in yuan instead, that erodes U.S. leverage. It also weakens America's ability to pressure governments financially, something Washington has relied on for decades. This is the real reason U.S. officials are desperate to keep Argentina in the dollar system. The bailout isn't just economic stabilization, it's geopolitical defense. If the U.S. steps back, China fills the vacuum, and de-dollarization becomes not just possible, but appealing. And that shift wouldn't be temporary. It would reshape Latin America's financial structure for years, leaving the next U.S. administration facing a region far less tied to the dollar. And it's not just governments feeling the pressure. Even America's biggest tech company is being squeezed by China's rise. Nvidia, the world's most valuable chipmaker, is now facing a crisis that could rewrite the future of the global tech industry. Jensen Huang, Nvidia's CEO, has admitted something investors have feared for years. Losing access to China's booming AI chip market could hit Nvidia's future earnings and its inflated valuation hard. The scale is massive. Huang estimates the China AI chip market at around $50 billion in the near term, and as much as $150 to $200 billion by the end of the decade. If Nvidia is locked out of that growth, its revenue potential shrinks overnight, undermining the assumptions behind its sky-high market value. For years, Nvidia has been treated as untouchable. Its GPUs dominate AI and data center workloads. Its CUDA ecosystem is the industry standard, and its meteoric rise has driven a valuation bigger than entire sectors of the economy. But Huang's recent statements are a warning. Nvidia's future is far more vulnerable than most investors want to admit. And that vulnerability becomes even more serious when you look at what China is building right now. Technology that could challenge Nvidia at the hardware level. Let's keep it simple. China may have just pulled off a breakthrough that could change the entire AI hardware race. Researchers at Peking University have developed a new type of chip that doesn't work like traditional digital processors. Instead of constantly moving data back and forth between the chip and its memory, the biggest bottleneck for GPUs, this new design performs the calculations inside the memory itself. That single shift changes everything. Traditional digital GPUs, including Nvidia's H100, waste enormous amounts of energy simply transferring data. China's new analog chip bypasses that problem completely. According to the researchers, their prototype can reach up to 1,000 times higher throughput than Nvidia's H100 and deliver 100 times better energy efficiency while keeping similar accuracy. And this isn't just a lab gimmick. The chip reportedly reaches a precision level comparable to commercial systems, meaning it can actually run real AI workloads, not just toy examples. The implications are massive. A chip that uses dramatically less power and delivers far more speed could allow China to build AI data centers that are cheaper, faster, and fully independent of Nvidia. It also means China wouldn't need to rely on US technology for cutting-edge training tasks, even as Nvidia struggles with tightening export bans. If this design scales, and China is investing billions to make sure it does, Nvidia wouldn't just lose a market. It could lose its entire technological lead. Here's the reality. China's breakthrough isn't just a technical achievement. It's a direct threat to Nvidia's core business. GPU supremacy is now at risk. Nvidia's H100 and Blackwell chips have been the backbone of modern AI infrastructure. But if China's new analog chips deliver anything close to their claimed performance, and do it at a fraction of the power cost, Nvidia's competitive edge could collapse. These analog processors may be specialized, but they target the exact high-impact workloads that drive the most expensive parts of AI training and cloud revenue. And energy efficiency is becoming the new battleground. AI data centers burn staggering amounts of electricity. A chip that's even 10 times more efficient would be transformative, but 100 times or 1,000 times? That would let China build far cheaper, faster, and more scalable AI clusters without touching Nvidia's hardware. If China can mass-produce these chips domestically, Nvidia doesn't just lose a market, it loses leverage. The geopolitical impact is huge. Nvidia has been lobbying non-stop to restore access to China, working around export rules to sell downgraded chips. But if China develops a high-performance domestic alternative, the power dynamic flips overnight. Beijing wouldn't need Nvidia at all, and the US wouldn't be able to use chip exports as a pressure tool. And that's happening at the worst possible moment. Financial markets are flashing warning signs. As of mid-2025, the S&P 500's P/E ratio is pushed up to nearly 28, well above historical norms. 91% of fund managers now say US stocks, especially AI names, are overvalued. Even Goldman Sachs' CEO has compared today's frenzy to the dot-com bubble and warned of a major drawdown coming soon. Central banks, including the Bank of England, are sounding the same alarm. And Nvidia? It just hit an unprecedented $5 trillion valuation, a milestone built largely on expectations of unstoppable growth. But export controls are tightening. China sales are being cut to zero, and even Nvidia's CEO admits future forecasts will no longer include China. For a company that relies so heavily on global demand, that is a serious red flag. So here we are. US banks walking away from a $20 billion bailout, China developing chips that could surpass Nvidia, and America's biggest tech companies sitting on what many fear is an AI bubble. The real question now is this: what breaks first? US financial influence, Nvidia's valuation, or the dollar's dominance itself? What do you think? Share your thoughts in the comments and make sure to subscribe. See you in the next one.